Well, that's fantastic. I know that always taxation, regulation, and institutional adoption are the most fun topics in the house. So I understand why there are so many people, of course. So thank you for coming to learn about these great things. So as a way of quick intro, myself, I'm Kate, also known as KateGoesTech, a futurist and sales at a crypto exchange. So makes sense. I would hopefully know something about institutional adoption. And I will give the word to our esteemed panelists to also introduce themselves in the way they see fit.
Hi everyone, my name's Tara Annison. I head up product for a company called TwinStake. We're an institutional staking service. So for companies that are sitting on large amounts of crypto assets, they can stake them with us. We run all the infrastructure for them to help them generate a return. My background has been very much in the institutionally focused side of things with crypto, across lending and borrowing, cold storage trading. And initially I started my life out within the institutional world of TradFi banking.
Hello everyone, I'm Nikita Fadeev from Fasnara Capital. We're a London-based hedge fund, been around for 12 years, around about $4 billion for institutional clients. I started the crypto side of the business 5 years ago, and so over that period of time we grew quite a bit, and now one of the largest liquidity providers in the space.
Hi everyone, Baptiste, founding partner at Lead Block Partners. We're a venture capital fund. We invest specifically in B2B startups in the blockchain Web3 space. And one of our main themes is actually institutional adoption of digital assets and what tools institutions need to actually enter the space. A few examples of startups you may know, like Bitpanda, Talos, Token Terminal, Kiln, Hextrust. Those are all portfolio companies of ours and more. So yeah, excited about the theme.
Wow, sounds like we're in a good company. So I think just to start off, I would probably ask, what do you guys think, where are we actually in all this institutional adoption? Do you feel like with this prolonged bear market, institutions feel more likely and more eager to jump in at the lower prices, or there is still something holding them back? And if it is, what the hell is that we can probably solve together, hopefully?
So big broad question there. I think often people look at the industry and think maybe there isn't institutional adoption because it doesn't get as much in terms of headline space as the kind of hacks and crimes. It doesn't get as much headline space as some of the activity from maybe the enterprise, kind of SME businesses. But when you look at what the institutions are doing in crypto, there's a lot going on. Like if you look at the recent CCIP activity with Swift, so they've partnered with BNP Paribas, with Citi, with S&Z, with ANZ, with the Depository Clearinghouse. So they're all kind of grouping together to look at bringing the kind of Ethereum-based activity into the very traditional finance world. You've got the vast majority of central banks all investigating and many actually running POCs for central bank digital currencies. You've got many of the traditional banks looking at custody, which totally makes sense. It's like literally their bread and butter is keeping assets safe. So there's a lot that the institutions are already doing in the space. I'm sure you guys can feel it too with the businesses that you're in. In the institutional staking world, we've got billions of dollars of assets under management from pure institutions. Lido, Rocket Pool, they've got a lot of activity from retail, and you see that in the news a lot. But the institutions are holding crypto assets, they're using crypto assets, they're investing and using crypto services. So it might feel that maybe not as much is going on, and certainly in a crypto winter when the prices get the headlines, but there's a lot of activity happening, maybe some of it a little bit on the down
Under
low.
the scenes, yeah.
Yeah, but a lot's going on, certainly.
So you might all feel depressed, but don't worry, stuff is happening somewhere.
I think it's useful to break the question in two sides. So one is institution investing in tokens and what that means, and using technology. So in investing in tokens, I think if you drill a bit further, effectively there are venture bets, and those been going for a very long time. And partly because of macrocycle, partly due to the performance of past vintages, and probably there is quite a bit less deployment of assets now that before in the past 2 years. But on the other side, there are more and more products that are more familiar to the TradFi institutions. Some of those, future settled ETFs, spot settled ETFs that are coming into the picture, but also kind of much more familiar ways how they could obtain exposure through whatever systems and through more familiar gateways into it. And so that's kind of one part that is definitely maturing, quite quickly. So the technology is getting better, the fees are getting lower, and access improving, and just the whole pipeline is maturing quite quickly. And then the second bit where the technological adoption is happening. So there is actually probably much more to talk about, though it's mostly, or not mostly, but like oftentimes happening behind the closed doors on private chains rather than public. So the biggest institutions like JP Morgan and so on, they're trying to keep it more kind of within the walled garden, and then maybe try hybrid, and then further down the line explore something that is more public.
Definitely.
Maybe if I can build on what Nikita said, I completely agree on the technological side. I mean, your question kind of linked prices being down to activity in the institutional space. I would say something to bear in mind, these are huge entities, like when they make an announcement, we're launching custody or trading or whatever, as NASDAQ did, or the LSE recently talking about launching an exchange based on blockchain tech. Like they've been working on that for 12 months or 24. Like it's a serious commitment they're making. It doesn't matter if Bitcoin is at 20K or 60, really, in the short run, in maybe 1 to 2 year per view, especially the LSE, to be fair, because that's not even crypto. It's more blockchain technology. But, so that doesn't matter. They keep pushing. If you look back at like 2019, most institutions, they didn't really have a view on blockchain crypto. Now, it's rare to find a bank who doesn't have a strategy and doesn't have a team. And some have 50, 70, 100 plus people. Like if you look at Goldman, if you look at Société Générale, at JP, at Fidelity, these guys, they're building a lot, and they're learning massively, and they're investing as well. So it is moving. We do need some degree of, price activity because it kind of fuels the space. But they're working for sure.
I really love your positive outlook, Baptiste. 26K, 50K, what's the difference? Hopefully.
Needs Bitcoin anyways. Sorry.
Well, I mean, if you believe in it, then you're right. Who cares what the price is now when you can just buy up and it will be $1 million in 10 years anyway? Well, it's not a financial advice. So I guess the next question I'd like to pose to our esteemed panelists is a bit of maybe an allegory. Do you think crypto regulations around the world would go the way of the, plugs? As we know, in all countries and geographies, they're completely different. Or would they go probably more the way of radio frequencies, where everyone knows that this frequency is used for that? How do you see it's harmonized or being completely different everywhere? And what would be the main drivers for that across the world?
So I love the analogy.
Ladies
with
first.
So thinking about regulation, I think a utopia where we have some kind of like pan-galactic crypto regulation is never going to happen. We don't have it in TradFi. There's a lot across different jurisdictions in TradFi, which is sharing commonalities like anti-money laundering, counter-terrorist financing. You can't deal with various sanctioned countries, and there's definitely similarities and commonalities there. But there's also nuances across different jurisdictions, and that's natural, and it's not something I think we should be trying to avoid. And I think we'll get the exact same in crypto. In fact, we already kind of have that. You've got MiCA across the European Union that has many similarities to regulations in, say, APAC or in Africa, certainly when you think of the anti-money laundering aspects. But there will be different treatments of tokens and NFTs and DeFi across different jurisdictions. So for me, I think the important question isn't harmonized regulation across the whole world. It's more about how do we have sensible regulation which tackles the actual problems. How do we have regulation which means that if you commit a crime, whether it's in crypto or TradFi or selling teddy bears, you go to prison. How do we have regulation which really takes into account the technical nuances of crypto? Like, it is different from your traditional financial networks, and that has to be taken into account. Thinking of staking specifically, that isn't some homogeneous activity. Staking through a pooled operator is very different from a centralized service, is very different from a staking provider. And so any regulation which comes into play regarding staking specifically, not even kind of DeFi generally, has to take into account those nuances. So I think really, for me, that's where the important questions in regulation are, is that technical feasibility, specificity, and making sure it's actually proportional and will aim to do what it's meant to do, which is, stop crime or promote innovation, whatever it may be.
Yeah, I mean, I think it will become fairly similar and aligned over time. I think what the US is doing is a bit insane, but we definitely need it. Institutions will come in if there's clarity, and more capital will come in if there's clarity. We do need to protect consumers to some extent. So it's coming for sure. Europe is kind of leading the way, and then we will have some countries which try to do it different for a simple reason of competition. Just trying to make it a bit easier, make it a bit more business friendly potentially, and try to draw businesses their way. Hong Kong have made a big shift, for example. We'll see what the UAE does exactly. They're doing some interesting things, but there's some degree of volatility around regulation in the space where you could be asking questions. And hopefully, the US will wake up to it. We'll see over time, but I'm confident it will happen. They won't let it go.
Well, I guess we all know that Hong Kong is currently being used a bit of a backdoor by China. Maybe the US is going to use Puerto Rico, or, they will probably find the way. So I guess to spice it up a bit, I would ask, what innovation, technology, or the entrance of which market player can actually bring a new trillion or like 10 trillion into the crypto market? Because obviously we all noticed the market cap going up to 3 trillion, then going back down to 1. And obviously, I guess it's in all of our interest, whether Bitcoin is 25, 50 or whatever, to have more trillions into this market. So what do you think will bring the next one, the next amount of money in here?
I think market cap is probably not the best metric to use to judge success, because as we've seen, it could be really, really misleading, because it just implies that you couldn't liquidate whatever quantity of something at the just current price, which is very rarely the case. But setting that aside, I guess if I were to rephrase it a little bit, what institutions could really drive the adoption and open the floodgate for more capital to coming into the space, and smarter capital, which I think is probably healthy for the whole system to operate on principles of proper price discovery and people to be sensible rather than really gamblers like people were in 21. And so I think just ETF could be a pretty important stepping stone in that direction, just because it's will be a huge validation if it's done by guys like BlackRock, and kind of people keep on saying about that, but if you double click and think what are the implications of it, so basically you have huge asset managers which are controlling, which are the largest investors in vast majority of public companies. If you take, BlackRock, Franklin Templeton, Fidelity, Vanek, and a bunch of those guys. So probably if one ETF gets approved, all of them will be approved at the same time or with very little delay. And at that point, you have these huge institutions with extremely effective distribution channels where they could market, onboard more clients, more users, or not users, but like more investors essentially. And the product will be really powerful. It will be a huge validation for the asset class. So I think just to name one, ETF.
So you were saying the time of crypto degens is over and the time of big boys like Fasanara is coming.
Well, I'm not necessarily trying to set ourselves out, but more like...
Well, I'm helping you.
Well, at least that in this context. But so I guess what I'm trying to say is that those excess liquidity that persisted for quite a long time and achieved the extreme level of momentum in 2021 is just like was perfect storm for vague, badly understood tokenomics. And huge wealth that some people with very little sophistication, very little risk management were having, and so that just kind of extrapolated certain trends way beyond reasonable.
That's very true. Well, I did hear ladies have the right part of the brain more active, so I guess I would really put most of the hope on Tara to understand how we're bringing this next trillion in here.
Well, I was actually going to very much build off Nikita's point from a risk management perspective. So when you consider kind of risk in crypto, there's so many facets. There's the crypto crime risk, and a big part of what I've been doing for the last 4 years was a company called Elliptic, crypto compliance, trying to stop, the likes of North Korea stealing funds to fund their nuclear program.
Yeah, these lasers are creepy bastards.
Yeah, they are. They're very effective, sadly. But then the whole way down to your scammer. So I think there's a lot we can do from a risk management perspective to protect actually both the whole way from retail up towards institutions, make sure funds can be kept safely, and then also just risk management products like on-chain insurance, making sure you've got that in place, making sure we've got risk management related products. The traditional financial space is so complex with all the different products you can get, but they're really effective, largely, for managing risk. And if we're going to bring institutions into the crypto space to be trading, investing, just interacting with really large amounts of crypto, they need a load of tools in their toolbox to manage that risk. And right now, I don't think we have quite as sophisticated risk management products as they'd want. But as we start getting more institutions coming in, as we start getting more specialized companies in the space doing risk management products, I think that will give the confidence to the institutions of we can bring big amounts of money in here knowing that we can hedge it effectively, protect it effectively.
Absolutely. You want more money in crypto, keep Russian and North Korean hackers away. I think we all should be working on that.
Maybe to build on what you both said, I mean, I guess if you big picture, I'd say to onboard 1 billion people into blockchain, at least for the financial side of things, we will need the help of institutions. It clearly doesn't resonate with the reason Bitcoin was created, and obviously it's kind of opposed to that to some extent of the idealistic view. But big picture, blockchain is very complex, very hard, and there's a lot of risk embedded. We always say not your keys, not your crypto, and I imagine I respect that. I imagine a lot of people do it here as well. But it's super scary. Like, you could just lose everything, get hacked, etc. So, we're just simply not going to be onboarding billions of people based on that rule. So people have to trust someone. And who do they trust? They'll trust some crypto native companies, probably. I think there are better ones than others, but we'll see over time. And they'll definitely trust historical people they used to trust, like institutions. And so that's why embedding blockchain technology and digital assets within their products and onboarding billions of users will be one of the ways we actually do it. Ledger and MetaMask won't enable us to do it, simply. I'm pretty confident on that.
Yeah, that's true. I guess we all know there are these very interesting Bitcoins in Satoshi wallet that were never moved anywhere. And recently I read a really cool book by Chinese-American author Kai-Fu Lee, AI 2041, where he actually is describing the evolution of quantum computing and how once it comes around to be, which we actually don't know whether it's going to be from the government actor, the legit entity, or maybe from North Korea. And obviously these guys use quantum computing to hack Bitcoin. Well, I would do the same thing first and foremost. So that's one of my favorite things, like seeing how these new technologies or how current technologies, maybe in a new way, are going to interact and reform the things we have now. So I guess a very interesting question would be which technologies, present, imagined, or maybe even unimagined, but you guys know of something, will help drive whatever, not institution, just drive crypto and blockchain adoption, and which technologies could potentially fully kill it?
So I could talk about quantum for quite a long time, but we'll go for drink and talk all nerdy things. But I think actually privacy tech, maybe perhaps surprisingly, like there's a lot of people who look at crypto and you get these criticisms of the criminals use Bitcoin because it's anonymous. It's not pseudonymous. They use it to a fairly good degree, but they get caught because it's one of the most trackable currencies in the world. I know that because I used to work at a crypto compliance firm. And so when you look at people and criminals using crypto or different like Bitcoin or different cryptocurrencies, the trackability of it is what helps you catch them. But now imagine you're an institution, you've got a really big pile of ether that you want to trade, and you make a trade on a DEX. But your address is labeled, so everyone can see what you've just done. They can see that you've just put loads of funds into this liquidity pool. That's maybe not the amount of information you want to show. And so I think to get more of the institutions in, what we need is a really nice balance between on-chain privacy to be able to do whatever trades you need to do, to have the privacy of who you are, who you're facing off against, kind of coupled with a lot of the beauty that we get from the auditability of a blockchain. And so you kind of can't move at the moment for people talking about kind of zero knowledge proofs or fully homomorphic encryption or multi-party computation. Everyone's kind of obsessed with privacy tech. And I'm, from a nerdy perspective, really excited about that because I think actually we've got this amazingly open, transparent world in crypto. But also privacy is really important, and it's really important for institutions as well. It's why we have dark pool trading in TradFi and a lot of OTC activity. So I'm really excited actually for the continued development of privacy tech and what that's going to enable. And hopefully it will pull a lot of these institutions off the private blockchains that they're currently operating in, as you said before, moving them into a permissionless world, but where they can have their needed and desired privacy to operate on there. So I think hopefully that will pull them over back into the permissionless world of Ethereum and the likes.
Permissionless sounds amazing.
Just to maybe expand a little bit on that, I think like a typical institution, the way they think about some of these things is several-fold. So one is just cost saving, right? So if we could do the same thing that we do now, but then faster or cheaper, that's a pretty useful thing to have, and a pretty good multiplier for productivity. At the same time, to balance it off, they think in terms of risk. And large financial institutions that been created over very long time, they have much more to lose than to gain. Like especially faced with ample examples of people who tried to be the first mover and then kind of suffer the consequences. It goes from countries and regulations to particular startups to particular individuals. So it generalizes like pretty well. And so one way that they think about trust and privacy is like they don't need everything to be like really transparent, but they want to minimize risk. So for example, if there was some centralized entity which could onboard everyone and kind of not showcase who is who to the participants, but at least that somewhere someone did the check-in, and that now you can be part of this ecosystem and you're not facing those fat tail risk, be it with AML and KYC perspective. then that could be quite powerful. Obviously, from a very first principles, this is quite orthogonal to the whole ethos of crypto blockchain and how Bitcoin was built. But this is kind of a step in the direction of using something that people are familiar with, that the TradFi world is familiar with, and making a step towards something that is, a bit more middle, say, ground, rather than jumping all the way to some extreme. And this is kind of, you just need time for some of these larger trends to transpire. People need to be convinced with enough time, and Lindy effect plays a quite important role in situations like this, where the longer something existed, the more likely it is to keep on exist. And so effectively, privacy is an important one, but also just quality of the user experience and trust. And trust, above all, because it kind of keeps on being invalidated, but on both sides, right? In TradFi, there were over the years, perhaps equally, if not more, examples of some issues. If you expand it to the world level, not keep the focus on just one particular country or the subset of people that you know.
Exactly. Let's all remember that Bernie Madoff wasn't involved in crypto, so we are the good guys. We're supposed to be a good guys.
Maybe I'll build on what Tara said. I completely agree on privacy, and I think ZKP has a huge role to play. I'll just highlight very quickly, because I think there's some degree of misunderstanding of how financial regulators see privacy. They actually say we need it. Like, if you read the ECB docs on CBDCs, and I'm not taking a view if we should have a CBDC or not, but they say one of the key problems to solve is privacy. We all have a right to privacy on how we spend our money. Of course, if you ask the Central Bank of China, they'll have a different view, but that's something else. And I guess, in terms of technology, one other aspect that I think is interesting and that can lead to democratization, and that would be actually fairly easy to do, although it will take time, is existing financial rails are absolutely shit. And the financial institutions, they know that, and the financial regulators know that to some extent as well. And so simply adapting blockchain technology to the financial rails of today will create a ton of value, will lead to use of permissionless chains in most cases. Again, if you look at ESMA, the regulatory market authority in Europe, with a number of regulations to enable exchanges on blockchain, they want public chains. Like, it may sound like you want private, but actually no, they want private. So they're all pushing towards that. So you could have a regulated exchange in Europe for all types of assets on Ethereum. That's what they're pushing towards. And if you listen to, post-FTX, there was a lot of noise, obviously, about the space. But if you listen to people like Larry Fink or David Solomon, so, CEOs of BlackRock and Goldman, they both came out saying, blockchain technology is the future. It doesn't matter what happened with FTX or whatever. What matters is it's a much more powerful technology, and we'll have to implement it in our work. So.
Yeah, I fully agree. Personally, from everything I'm observing, I definitely see the need for more adoption, specifically of the blockchain technology. And it's fascinating that actually Hollywood and entertainment industry gives us the best use cases for that. I guess you all guys have seen the Black Mirror, Joan is Awful, or if you haven't, please take a look, it's hilarious. Not for Joan, but in general, it's hilarious. And important things like that, her situation and the whole invasion of people's privacy and screwing up their life could have been easily avoided if she just used blockchain layer to actually go through terms and conditions instead of mindlessly agreeing to all of them. And I'm sure all of you guys who've seen this movie are now probably thinking, damn, there must have been some terms and conditions I've signed, and I don't know what the consequences can be down the road in 1, 2, or maybe 10 years. So I think we can see the inspirations, illustrations, and amazing use cases being right in front of us. which will allow all of us to actually take this industry we all love from simply up and down 25-50 speculation area into actual adoption and actual value for all human beings. And I'm sure that's why we are all here, to change the world with Web3, crypto and blockchain. So I think whether it's crypto native folks we can all trust, or all these amazing big boys, institutions, and obviously Fasanara as the main ones, or selling teddy bears wherever you want it, especially on blockchain, maybe fully private, depends which teddy bears you're selling. I think it's important we are moving in the right direction and using technology for all of us. So having said that, I'd like to thank our amazing, nerdy, fabulous panelists, and I'm sure I see all of them and you and everyone at the break, and have a great time having coffee and drinks.